What's good, y'all, man? Welcome back to another video. Today we in class. Welcome to my class. I'm your professor today, and I'm gonna be teaching y'all the beginner basics, everything you need to know to get into futures and trade just like me. I'm gonna try to keep this video under 10 minutes, but if I do go over 10 minutes, it's not gonna be more than 15 minutes because I know y'all got some short attention spans. Like, I'm just keeping it real. Y'all got a short attention span, bro. Like, I'm a victim too. We all got short attention span. Y'all ain't trying to hear me out for 30-40 minutes, and I'm not trying to make a 30-40 minute video. So we just gonna keep it short. This is part one. I will be making a part two to this. What else? If you're new here, like and subscribe, and any questions y'all got, just leave them down below. So let's just get straight into it. Alright, so starting off, a little quick disclaimer real quick. I am not no professional. I'm not a financial advisor, and this is not no financial advice. So no, do with that what you will, just chill. I'm just trying to teach y'all the basic, because you shouldn't have to pay to be in a Discord group or buy somebody course to learn how to do this. Like, it's free information. Like, y'all just need to lock in, take your notes, get your notepad and take some notes. But let's just get straight into it. So what exactly is futures trading? Simply put, it's just the buying and selling of a contract to that's linked to an asset or a commodity or a stock, like gold or NASDAQ, at a predetermined price and date in the future. So you're basically, yeah, just buying and selling a contract linked to an asset. So a breakdown of that is, so imagine you think the price of oil is going to rise in the next month. You can buy a futures contract for oil at the price that it is right now, and then once it reaches that price that you expect it to reach, you sell it, and now you just made a profit. Now, it's that simple. That's all it is. But on the flip side, if you think the price is going to drop, you can also sell a futures contract, and when price drops to the level that you think it's going to drop, you basically get paid like a premium from it dropping. So that's how you make money from it going up and down. So let's move on to the next topic. So why do people trade futures? You don't really need to take notes on this. This is just for awareness of what you're trading and like why it exists. So hedging and speculation are the two main reasons. Hedging is what companies and big investors use. They use futures to protect themselves from price fluctuate. Damn, my bad. But short-term price fluctuations. So for example, a farmer might sell futures contracts for their crops to lock in a price and protect themselves from, like, if the price of that crop drops or something. And then speculation is the traders, like people like me and you. We speculate on price movements, short-term or long-term, but price movements, and we can buy and sell the futures contracts to make a profit based on whether it's going up or down. And the key components of a futures contracts, now this is something that you're going to want to remember. So, you know, take notes if you will, if you need to. But so the asset is the main component. That's what you're trading, like oil, gold, or stock indices like NASDAQ, US 30, S&P 500, stuff like that. You know, the price is the second component. This is basically just the price that you're selling at and the price that you expect it to reach or anything. But and the expiration date. Now, different contracts expire like every 3 months or every quarter, and I'm actually going to get into that next. So let's just get into that. So contracts expire every 3 months, and you have to roll it forward to the new contract. So each month has a code, and these are the month's code. You can write that down, or screenshot, whatever, just to help you remember each month code. So for example, so NQ is the asset that you're trading. So NQ is NASDAQ. So and H is which month code? March. So March is, so NQH means that this is the March contract. This contract expires in March. So once we get to March, this contract will expire and roll forward to the code that's 3 months ahead. So what's 3 months ahead of March? June. So instead of NQH, it's going to change. Once we get to March, it's going to change to NQM. And now we just roll forward. Once we get to June, we roll forward again 3 months, and it's just continuous like that. So, but it's not the same with every contract. Different contracts are on, maybe on different month codes. So you just got to be aware of that and just know which contract you're trading, because if you're not on the right contract, you won't be able to buy or sell. And then next we have leverage. So leverage, this is a very important point in futures, because you can, if you don't understand leverage, you can blow your account and lose a lot of money very easily. And I know y'all don't want to be out here just losing money. So need to write this down, take notes, remember that, and understand leverage. So futures contracts, they allow you to, you can basically control a larger amount of money, small, relative to what you have. Or how can I say it? Like, you can control more money than you have in your account with something called margin. And this means that you don't have to pay the full price of a futures contract. You just pay a small percentage up front, but you still are making a profit from the full price, as if you were paying the full price. And that's how you can, make large amounts of money or lose large amounts of money with a smaller amount of capital. But you just have to understand leverage and have good risk management. And you should never be you still should use leverage, but you should never over leverage to where it's gonna kill your account in one trade. So let's just get into an example of the futures trade. So this is an example of a swing trade. What I do is a little different. I scalp the 5-minute chart, so I'm in and out within minutes within the same day. But this is the example of a swing trade, just for the sake of the video. So let's just go over it. So you think that gold is going to rise in the next 3 months. So you buy a futures contract for 100 ounces of gold at $1,800 an ounce. So if price hits $1,900 an ounce, you just made a profit of 100 for each ounce that you bought. Multiply that by 100 ounces, the 100 ounces that you bought, you just made 10K. Now, if price drops to 10, I'm fucking up, y'all, my bad. But if price drops to 1,700, you just lost $100 per ounce. That means you just lost 10K. So this is how futures can, you can make a lot of money, but you can also lose a lot of money at the same time if you don't have good. So you should never, for this example, you should never be risking 10,000 unless that's like 1% of your account. So you shouldn't be risking 10,000 unless you're on like a million. I think that's a million. 1%. I don't know how to do math, y'all, but 10,000 you should never be risking unless that's like 1 or 2% of your account. So just keep that in mind about risk management. Then next, some little tips for beginner traders. So before you even think about jumping in, you need to learn and master a strategy. Now, I have videos out already on the strategy that I use, but you may not like that strategy. It's all about finding what strategy works for you and what strategy do you think is easy and that you can, what strategy makes sense to you, because everybody brain work differently. You're not gonna like the same thing I like. So yeah, but before you jump in, just make sure you learn the strategy and you master it and you're confident to execute it. Like when you look at these charts, you should already see your strategy automatically. Like it should just be like the snap of a finger for you. Trade demo. Before you even think about opening up a live account with your real money or buying a prop firm, trade demo and just see if you can be profitable on demo for at least two to 3 months. But you could really do 1 to 2 if you just don't want to wait that long. But yeah, and prop firms, that's a whole different story. I may go into that on the next video, or I'll make a separate video on it. Just let me know what y'all want to see. And then yeah, but understand the market that you're trading in, understand the asset that you're trading, and just research the news, and so you can know what's going on with it and have a overall sense of direction of where the market could be headed. Use stop losses, bro. Like please use stop losses. If you a new trader, a beginner trader, use a stop loss, bro. Please. If you don't use a stop loss and price spikes too fast in the wrong direction, over with. You just blew your whole account because you didn't have a stop loss. Don't over leverage. It can be tempting to over leverage, trying to flip small accounts, but it's just gonna lead to you blowing accounts. Like, you may get lucky once or twice, but if you keep doing it, over leveraging over and over, you're eventually just gonna lose all your money. So just don't even over leverage. Just don't. Stay disciplined. You're gonna with trading, like, you're gonna get to a point where you realize, like, you can really make a lot of money from this. Like, you can make a lot of money for this. Just don't get caught up in that excitement, and don't let your emotions take control. Like, with trading, you have to be zero emotion, no emotion at all. Emotions, just throw that out the window. With trading, you have to have no emotions. You can't let money control you. You have to just be a robot. You gotta be a robot. Stick to your strategy. Stick to your strategy. Stick to the fundamentals, and stick to your rules, and you'll be straight. Like, just stay disciplined. The risk, I'm talking about the risk of future trading. Like, it's very volatile. It moves a lot. You can lose more than your initial investment if the market moves too fast against you. Like, you see this long black candle right here? If this candle probably happened like fast, like it probably got to that point within seconds. So say you're in a buy. Well, I don't even see how you can get in a buy right here, but like, say you're in a buy right here for some odd reason. Price spikes like this candle. Your loss just turned from like this to this. And that's probably, like, depending on how much you're risking, that's gonna be more money than you were originally risking. So yeah, just that's really all, man. I am gonna be making a part 2 for this, so don't worry. Any questions y'all have or anything you feel like I didn't go over, just comment down below and let me know, and I'll remember that for part 2. But yeah, man, it's really the main things you just need to understand is leverage and risk management. You need to have good risk management and understand how to leverage. That's all. That's really all for it. Like, once you get those down, you know, just learn your strategy and be disciplined, and you'll be straight in the trading game for real. So yeah, that's all, man. Let me know what else y'all want to see, what questions y'all have in the comments. If you feel like you learned something from this, I hope y'all took some notes. Leave a like and subscribe, and that's all though. I'll see y'all.